I want you to imagine a theater. It is the most expensive, luxurious theater in the world. Everyone is inside. Your neighbors, your parents, your coworkers. They are all watching a movie called The Soft Landing. On the screen, the stock market is hitting all-time highs. Artificial intelligence is promising to solve every problem. The Federal Reserve has promised that nothing will ever break again. Everyone is happy. Everyone feels rich. But there is something the people in the front row, the billionaires, the CEOs, the insiders, have noticed. They have noticed that the theater is on fire. And they have also noticed something else. The exit door is tiny. For the last 3 months, while the retail investor, the average person with a 401k, has been buying the dip, the insiders have been quietly slipping out the back. Mark Zuckerberg, Jensen Huang, Jeff Bezos, the Jamie Dimons of the world. They are selling billions of dollars of their own stock. They are cashing out at the top. Why? Because they know what is coming in 2026. They know about the liquidity cliff. You see, we are currently living through a demographic singularity that has never happened before in human history. It is called Peak 65. As we speak, more than 11,000 Americans are turning 65 years old every single day. That is 4 million people a year. This generation, the baby boomers, owns 52% of all the wealth in the United States. They own the stocks, they own the bonds, they own the real estate. For 40 years, they have been net buyers. They put money into the system every paycheck. That buying pressure pushed the market up. It made us all feel like geniuses. But now they are retiring. And when you retire, you stop being a buyer. You become a seller. To pay for their health care, their living expenses, and their cruises, 70 million boomers are about to try to sell their assets at the exact same time. But here's the question that should keep you awake at night. If everyone is selling, who is buying? The millennials? They are drowning in debt. The banks, they are insolvent. The government, they are $36 trillion in the hole. We are walking into the greatest rug pull in financial history. The system is designed to convince you to hold onto your paper assets, your stocks, your bonds, your ETFs, just long enough for the smart money to sell theirs to you. You are not the investor, you are the exit liquidity. In this video, I'm going to expose the 3 specific signals that prove the crash has already begun. I will show you why the AI bubble of 2025 is a mathematical mirror image of the Nifty 50 crash of 1973. I will explain why the US government just quietly reclassified silver as a critical mineral in preparation for war. And I will show you why the only way to survive the coming Great Betrayal is to own the one asset that has no counterparty risk, no CEO, and no printing press. To understand 2025, you have to understand 1973. History doesn't repeat, but it rhymes. In the early 1970s, Wall Street convinced the world that there were only 50 stocks worth owning. They called them the Nifty 50. Companies like Polaroid, Xerox, Avon, and McDonald's. The narrative was exactly the same as today's AI narrative. They said these companies were one-decision stocks. You buy them once, and you never sell them. They were growing so fast and they were so dominant, the price didn't matter. Valuations didn't matter. Polaroid traded at 90 times earnings. Xerox traded at 50 times earnings. Investors said, it's a new paradigm. Photography is the future. Sound familiar? Today we have the Magnificent Seven. NVIDIA, Microsoft, Apple, companies trading at astronomical valuations because AI is the future. But in 1973, something happened. Inflation spiked. The Federal Reserve was forced to keep rates high. And suddenly the liquidity dried up. The Nifty 50 didn't just fall, they were annihilated. Polaroid fell 91%. Avon fell 86%. Xerox fell 71%. These were real companies. They had real products. But their stock prices didn't recover for a decade. Millions of retirees who were holding these safe blue chips saw their life savings evaporate in 24 months. Today, we are seeing the exact same setup. Look at Broadcom and Oracle. Just last week, they reported earnings. They beat expectations. Revenue was up. But the stocks crashed 10% in a single day. Why? Because the market realized that the profit margins are collapsing. The cost of building AI data centers is exponential, but the revenue is linear. We are hitting the point of diminishing returns. The smart money sees this. That is why Jensen Huang sold $12.6 billion worth of stock. That is why Zuckerberg is selling every day. They are doing exactly what the Nifty 50 insiders did in 1972. They are selling the top to the retail investor who is buying the hype. Now, combine that stock market bubble with the economic reality on the ground. While the news tells you the economy is strong, the data tells a different story. We just got the November jobs report. The US unemployment rate just hit 4.6%. This is the red line. Historically, once unemployment breaks above 4.5% and starts trending up, a recession is 100% guaranteed. The SOM rule has triggered. The labor market is cracking. Why does this matter for your 401k? Because when people lose their jobs, they stop contributing to their 401k. They might even take a hardship withdrawal. They stop being net buyers of stocks. At the same time, the boomers, the peak 65 generation, are forced by law to take required minimum distributions, RMDs. The government forces them to sell their stocks to pay taxes. So you have the boomers selling because they have to. You have the unemployed selling because they need cash. And you have the insiders selling because they know the top is in. This creates a liquidity vacuum. And this brings us to the banking system. You might think, if the stock market crashes, I'll just keep my money in the bank. Wrong. Do you remember the bank bail-ins we talked about? The Dodd-Frank Act? It's still there. But now we have a new trigger, commercial real estate. There's over $1.5 trillion in commercial real estate loans coming due in 2025 and 2026. These loans were made when interest rates were zero. Now they have to refinance at 6% or 7%. But the office buildings are empty. Vacancy rates in major cities are at 20-30%. The owners of these buildings are just walking away. They are handing the keys to the banks. This leaves the banks with massive holes in their balance sheets. The regional banks, the ones that hold your checking account, are sitting on billions of dollars of unrealized losses. If we get a recession, 4.6% unemployment, and a stock market crash, tech bubble burst, and a real estate default cycle all at once, the banks will fail. And this time, the government cannot bail them out because the government is broke. They will use your deposits to recapitalize the banks. So where's the money going? If it's leaving tech and it's leaving banks, where is it hiding? It is going into strategic assets. Assets that are needed for human survival and warfare. Look at silver. For the first time since 1980, the price of 1 ounce of silver, 67, has flipped the price of 1 barrel of oil, 57. This is the Great Inversion. Why is this happening? Because the world is moving from an energy system based on burning, oil, to an energy system based on conducting, silver. Solar panels, electric vehicles, AI data centers, Tomahawk missiles, they all run on silver. The US government knows this. That is why the USGS, United States Geological Survey, just proposed adding silver to the critical minerals list for 2025. They are admitting that silver is a matter of national security. But there is a problem. We don't have any. The COMEX vaults have been drained. The registered inventory, the silver available for delivery, has dropped by 60% in just 4 days. The whales are taking the physical metal and leaving the paper contracts behind. This is the ultimate signal. When the richest, most powerful entities in the world stop buying paper promises, stocks, bonds, derivatives, and start buying physical reality, silver, gold, land, you know the game is about to reset. The great wealth transfer isn't just money moving from boomers to millennials. It is money moving from the unprepared to the prepared. It is moving from those who hold financial assets, liabilities of a bankrupt system, to those who hold real assets, no counterparty risk. Here is the hard truth that your financial advisor will never tell you. Your 401k is not designed to make you rich. It is designed to provide liquidity to the stock market. It is designed to keep you trapped in the system until you are 65, paying fees every month. When the market crashes, you are the bag holder. You can't sell fast enough. The circuit breakers will halt trading. The websites will go down. You will watch your net worth drop 50% in a week, just like in 2008. But physical silver? It has no circuit breakers. It has no website downtime. When the dealer refused to buy silver in my last video, it wasn't because silver was worthless. It was because the paper price was fake. The real price, the street price, is decoupling. We are entering a period where return of capital is more important than return on capital. If you're sitting on a 401k that is 100% invested in the Magnificent Seven, you are betting that the bubble will never pop. You're betting that history is wrong. You're betting that Masayoshi Son and Mark Zuckerberg are wrong to be selling. That is a dangerous bet. The window to act is closing. The peak 65 wave is crashing on the shore. The vaults are emptying. Do not be the person who looks back in 2026 and says, I saw the signs, but I did nothing. If you want to survive the Great Betrayal, you need to get out of the crowded theater before the fire starts. Diversify. Get some assets outside the digital system. Get something you can hold in your hand. I will continue to track the insider selling, the vault drains, and the credit crisis every single day. If you want the truth that CNBC won't air, make sure you subscribe and turn on notifications. Question for the comments. Do you trust your 401k to survive a 50% market correction? Or have you already started moving into physical assets? Let me know your strategy below. Class dismissed.